So this video is on ledger accounts and intro to ledger accounts. So we'll just start with a few examples so that you can get to grasp the concept of how you create a ledger account, and of course get to understand the double entry system, how it works as well. Okay, so suppose you have such a scenario there. Okay, the transactions of a new business in the first 5 days are as follows. Day 1, Avon commences business introducing 1,000 cash. What happens? What accounts need to be created? So most of the time, for every transaction, there should be at least 2 accounts. And take note of the word that I've used, at least. There are times when you can even have actually 3, but at least 2 accounts. Okay, so that we'll be able to see the double entry to be proceeding in those accounts. So Avon commences business introducing 1,000 cash. What accounts need to be opened here? Well, cash, of course, is a key term. Then you have to open the cash account. And another word which you should use here, which is commences. Commences business. When you hear that word, that should just trigger into your mind that this is the capital account that you need to create. Starting business, commences, this is the capital account. Those are the keywords. So don't worry about Avon. Avon is actually, this is just the company name. Avon whatever commences business. So the 2 accounts that you need are capital and the cash account. And let me just show you how you're going to record this transaction. So you had your capital there. You say capital. So which side of the capital account do you record transactions? Well, the capital account has a credit balance by nature. So you record the 1,000 there, credit. Double entry, meaning if you record one account on the credits, the other one should be where? On the debits. Remember this double entry rule. Cash. This can even remind you, even when you're stuck in an exam and you only know how to post one account, you know that, okay, if I've posted one account this side, the other one will be the opposite. That's all for this first transaction. Transaction 2 says buys a motor car for 400 cash. Which 2 accounts? Cash and motor car. The asset, which is the motor car, of course, and cash. Let's also show the entry as well. So what I'm going to do is that cash was already there, right? A trick for ledger accounts is that if an account is already opened and then another transaction comes to refer to it, we just add on. Okay, we just add on to whatever is already there in existence in that account. So currently, if you remember, if you just rewind the video, we had this in the cash, right? Now we have what? We have an addition of 400, which is from buying a vehicle. And when you're buying a vehicle, what is happening to your cash? Is it increasing or decreasing? It's decreasing, huh? When your cash is decreasing, what happens to the account? It credits. That's the trick. What about MV, motor vehicle, or motor car? You can say motor car, yeah. Then since this one is an asset, what is happening? The asset is being received. When an asset is coming in, usually we debit. That's the trick there as well. So the double entry is still complete. We've credited the cash and we have debited what? The motor van. Done. Or the motor car. 3 says obtains a 1,000 loan. This business obtains a 1,000 loan. What would be the double entry for such? Well, you've just obtained a loan. Yes. What is it being used for? Well, if it just stands like that the way the transaction has stated, then it should be, in fact, an increase in your cash. You obtained a loan. Usually it's coming in form of money form. So the loan account will be credited. Okay, because all loans are like liabilities that are all credited, and then of course your other double entry will be an increase in cash because you've brought in cash to the business. So as I earlier said, we already have cash account, and we have discovered that this loan account that we have to create has something to do with cash, because okay, to just plain that they have obtained a loan. So in that case, usually you picture it like this: the loan. Okay, what is that loan coming in form of? Mostly it's cash. That's the reason that you use it. The question is that blunt most of the time. So a loan, we said we'll credit the 1,000 because of the explanation we just gave. You rewind, and then you also go and what? Debit cash. It has increased your cash. Okay, that's what happens in this transaction. Next, the next one says purchases goods for 300 cash. What would you do in this transaction? Purchase goods for cash. In that case, purchases has been mentioned, it should be an account, and goods for cash. Okay, 300 for the cash. So there's a cash account and there's a purchase account. How do you know that purchases account is coming in? When you hear the word goods, then you're creating a purchases account. What if they said purchase motor vehicle? Would you still open a purchases account? No. We only open a purchases account when we hear the word goods. If there is mentioned maybe a non-current asset like motor vehicle, furniture, you just open the asset account for that particular item. So here it's purchases and cash. So cash apparently has been working a lot in this scenario. Okay, so they've said what 300 purchased goods for 300 cash. So what will happen in the purchases account? When goods are being purchased, then it's like you're receiving as a business, so we debit the purchases account. Then what do we do with the cash? Cash was being spent on buying those things. So when cash is going out, we credit. Next transaction. The next transaction is saying sells goods for 400 on credit. Well, even for sales account, yeah, there's goods, so definitely you open a sales account from the word it says sales. Then on credit, what does that mean? When you hear the word on credit, you need to open, is it the name of the particular person that you bought from, that has bought from you on credit? Or if it has not been stated, just say data account. That's what you say for sales, it moves with data, that's all. So as we said, when you hear the word sales and it was on credit, usually sales move together with the data if goods were bought on credit. Just remember that if it was purchases on credit, purchases move with what? Creditors. So if they've stated the name, put the name instead, not just data. These are the tricks you need to know. So a sales account has what? A credit balance. Why? Goods are being sold. It's like they are pictured that they are leaving the company. That's why we create the sales account. Then the data is pictured like he or she is receiving the goods, so them it's a debit. So that's a double entry. And basically that's it on this ledger account. They need to be like from here. Then now that you maybe be asked to create a trial balance of all your entries in this case. Okay, so it's like when you're creating a trial balancer, you just get to close up all your T accounts that you created for the particular, what's this, should I say, ledger accounts. So like for sales, I'll demonstrate on sales so that you get to see the sequence that works on the others. So you put a carried down figure on the opposite side of the account. Then of course the brought down will come that side. Just look at the sequence how it moves. Carried down goes the opposite of where the entry was. Then brought down comes back to the original side. Yeah, data same scenario. Carried down will go to the credit side there, because we're just balancing off an account here. And then 300 as you're brought down, and that's what we'll do for the rest of the accounts. And let me just focus on, is it cash, which had more than one detail. That one might be maybe a bit tricky since it's an intro video. I can still demonstrate. So we had a stay 1000. If you rewind, there was another 1000 this side. And then we had what? We equally had a 400 from buying that vehicle. Then we had another 300 from purchasing something, right? So you get to write your carried down from this scenario. So you add up all the columns. What's the highest? 2000. This is what goes in these two lines. These lines get to get the total, the highest total on both sides, which will feature there, right? Then you like try to balance off both sides by saying carried down is what basically balances both sides. That's what this CD means. C stroke D. So here what's the difference? Is 700 this side, is 2000 difference, 13. Okay, therefore your cash account balance is what? 13. And this is what you'll be now taking into your trial balance, because the trial balance gets to just have what? It gets to actually have your totals from all the ledgers, and then just comes to put them in one particular account called the trial balance itself, debits and credits. Then here we just have your detail. So we had capital, just be abbreviating cap. Okay, capital, we can just say that capital was 1000, right? Just rewind your video. Cash, we've just handled cash 13. Sales was in our video. How much? 4. Okay, we had what? Purchases. Purchases of how much? They were about 3. We had a data. $400. Are we done? Yeah, almost. If anything, we've forgotten one item. Sales for 400. Capital that. We need to also put for sales as well. So we forgot the loan. Okay, the loan payment as well was supposed to be here. If you remember, the loan was 1,000 as well. Should go the credits, because usually when you balance off something, as the way I demonstrated, if you balance off the loan account, you should also land with a closing balance of 1,000, which you come take in the trial. We've left out one item, motor vehicle. Motor vehicle is supposed to be here. So what I'll do is that, okay, let me just like erase this part a bit. Okay, so we can add up also for motor vehicle. So it's like, it's just imagine that your trial balance is continued and you had a motor vehicle of about 400, sorry. So when you get your total there, you should have about 24 as the balancing figure. So basically this video is just there to demonstrate how to handle ledger accounts and intro and get to know the tricks and ways around it.